Good afternoon, everybody. Monday, June 2nd. I'm an associate member of T3 Trading Group, which is an SEC-registered broker, dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is more or less the same. I'm not in Unity anymore, and I had some NVIDIA options on last week that I'm also out of. Let's go over to the videotape. I'm throwing my hands up in the air on the strength of this market. It's really mind-boggling to me at this point. SPY's up 0.6, Q's up 0.9, IWM up 0.4, TLT smoke today, still closed above 85. Dollar down, that does sometimes help stocks as long as the movement's not too big too fast. Gold was higher today, which recently has been meaning that the market is down. I think gold made new recent highs. But, gold up and the market up today. And Bitcoin went red to green. So Bitcoin closed small green. Same deal as I was just saying. I kind of throw my hands up in the air. I don't get it. I don't get this degree of strength. Usually I get it. I don't get it. Even when I'm wrong, I get it. This market is so strong still, but the systematic bid has been tuned down for a week plus. We do still have a lot of buybacks, corporate buybacks, so you got a big bid there. And the data that we're looking at is showing the hedge funds are chasing in. So it seemed to me like when we got bought back up on the gap down again this morning, it seemed to me like it was a degree of hedge fund chasing in the AI names. And I thought actually the opening price action and opening strength we were seeing in the market was going to fail. That ended up being correct, but then we turned right back around, bought the dip again for the millionth time, and closed extraordinarily strong. This market, it really has just been one of the strongest markets I've ever seen, and I'm struggling to figure out anymore who the buyer is. I said that last week at certain points. I was like, who is buying this dip at this point? We know it's really not the systematics. They're buying small. They're not selling. They're supportive. Buybacks are supportive. But who is buying this bad news? Like Thursday, it seemed like we should have went lower. Friday really seemed like we should have went lower. This is what I was talking about when I was on there with Greta. Is the taco trade of like buying the dip on any bad headlines related to trade wars right now. It is happening now so quickly that you're almost basically not even going down at all. When I was on with Greta, what I compared was, if you remember the China pause day, the China-U.S. trade war pause day, we gapped up huge, and it was rightly so. It made sense that we gapped up huge. That was big news, and we at that point were still within our positioning squeeze time frame. Systematics were still very heavy buyers. So we gapped up on that day. So that was a Friday to a Monday. On the Friday, we closed at like 564. On the Monday, we basically closed at 583. So one trading session after the pause, we're up $9 in the SPYs. Now on Friday, we get all these nasty headlines. United States accuses China of violating the agreement that caused the pause, violating the agreement that created the $9 move higher. United States accused China of violating it. And then China accused the United States of violating it. Doesn't look like things are going well. But whereas the move higher was $9 up in the SPYs just in one day, and then that continued from there an additional $12. So basically it was $9 plus $12 move to the upside off of that pause. The down move on how bad things are going was 20 minutes long. And 20 minutes long and like $4 or $5 of downside, and then it was immediately reversed. which is wild to me. Like the market is just like, we're sick of the language. It's really what it's coming down to. I think the market's like, we're sick of the language. We don't care anymore. Show us that this is bleeding into the hard data, which is what we're potentially going to see this week. So knowing that in the face of all the negative news that we've seen over the course of the last week or so related to trade uncertainty, that this market can't go down for more than 20 minutes at a time, my thought process when I was, thinking over the weekend, because what else is there to do on your weekend except think about trade wars, tariffs, and economic data? My thought process over the weekend was pretty much exactly what I just said. Like, all right, the market is moving into show me mode. Like, meaning if tariffs are so bad, show it to me in the data. And they don't want to just hear anymore about we're raising tariffs to 50% today. We changed our mind tomorrow. Wasn't that just like a week ago with Europe? Friday headline hits, we're raising tariffs to 50%. Monday, oh, never mind. Market basically saying we're sick of that. Show me that the economic data is deteriorating. And this would be the week where we could begin to potentially see that. This week's important. We're getting a lot of important economic numbers that are, for May, where May is where I think that we might begin to see a little bit of the implications of tariffs in the economic data. I think it's actually going to be more like July for June, but July is also a really seasonally strong month, so that'll be interesting, whereas June tends to not be as strong seasonally. So that's what I'm thinking coming into today. And then we get this ISM manufacturing number, and we actually sold off for 20 minutes into the number. And then the number came out, and maybe I'm missing something. Sometimes it requires a little additional research. Sometimes there's some revisions in there that I don't see right away. But at least on the surface of things, with what I saw on that ISM manufacturing, it was not good. And I will asterisk this by saying that I don't think that ISM manufacturing is the most important number in the world for the stock market. It can matter a bit, but not nearly as important as like CPI numbers or the payroll numbers we're going to be getting on Friday. But it was still not good. ISM manufacturing is in a contraction as expected, but the number came in worse than expected. And in addition to that, prices paid was higher. So that kind of struck me a little bit as that like worst case scenario economic number hitting of stagflation implications. Economic slowdown in the manufacturing worse than expected, but prices paid higher. And again, we did sell off 20 minutes into it, so we're a little bit extended to the downside on the 5-minute chart going into the number. And the number hit, and it's, again, not a great number as far as I'm concerned. But we went down for 2.5 minutes on it. Then we got a little bit of an oversold bounce. And I remember looking at this like 10:10 and 10:15 a.m. candle. And I was trying to coach everybody about, this is where you see if these moves are real or not. It's one thing just to get a down move. What really will prove to you if a move is real or not is how it trades after like that first bounce occurs. We get the bounce back, maybe in another universe, this upside tail here at 10:15 into the 80 MA is a pivot high that shows that sellers are stepping down. We don't like this economic number. Everything else is going to shit. And you get this little pivot high that then brings us back down to lows and gives us new lows. That's what happens in bear markets. And it makes sense, or not even in bear markets, just when markets are moving lower. It makes sense, I think, and I know Josh was trying to do this and calling it out, to be shorting off this 10:15 candle. To press the downside after a bad economic number as we're in this new trading month, as we just broke a little bit lower intraday and we bounced back to equilibrium and create an upside tail. I think it's a great short, actually, to short versus this 10:15 high. But this market has not been paying looking for downside continuation. As a matter of fact, it's been punishing you for looking for downside continuation. And today was, again, the exact same thing. No downside continuation today at all. We got this pivot high. It didn't even give us a pullback to create a higher low. It wasn't even like we wedged out and broke up. We had this tail high here at 10:15 a.m. that was immediately broken at 10:20, and then the market just grinded up for the entirety of the rest of the day, led by a lot of these like semiconductor stocks, like the Micron 5-minute chart we were looking at. Look at that. What is going on? Just a wild algorithmic bid underneath the surface in Micron, just, quietly ripping the thing up $4.50 throughout the entirety of the day. So, this market just punishes you for trying to push any downside on what appears to be legitimate trades after a negative catalyst occurs. It's the most incredible thing. And then, we were strong but kind of ranging somewhere after 2 o'clock here at 2:10, 2:15. We got the headline from Donald Trump that said that countries should submit their offer for what their trade deal should look like, because we're running out of time. We're running out of time to get trade deals done. Trump, Scott Bessent, they've both admitted themselves that there is no way that they're going to be able to get 150 trade deals done with 150 countries over the course of a 3-month time frame. And up until this point, we only got one deal done. There's literally only one deal done, and it's with the UK. And supposedly the UK was not happy with some of the language on steel tariffs, and that's literally the one country we've got a deal done with, and already it kind of sounds like it's not going well. But the market does not care. It just does not care. And I didn't even necessarily interpret that Trump headline as positive. Maybe it reduces a degree of uncertainty, because Trump had said that at a certain point he's just going to mail out letters and let them know what their deal is going to be. So he's following through with that. He's going to be giving deals. But are these deals at 10% where we're at now? Is he going to reduce tariffs even beyond 10%? Is that what the market's pricing in? Is the market pricing in that this floor of 10% with countries is it's actually going to be lower than that? It seems like that's how the stock market's trading. We're going to be making announcements here that we're just receiving bids from every country in the world, and we've decided that we're going to lower tariffs even below 10%. But based on his rhetoric at the same time, it seems so hard to believe that he would lower tariffs below 10%, when, again, the one deal that we got done is with the UK. It was a very good deal with a country that we didn't even have a trade imbalance with to begin with, so it should be the easiest one in the world, and we're still putting 10% tariffs on them. So I don't know how we're going to go below that, but it seems like that's what the market's pricing. So all right, we're gonna give you, everybody's going to get a deal soon, but what's that number going to be? So I didn't really understand why the market was upticking on that, outside of the fact that maybe it's reducing some degree of uncertainty that we're going to get additional deals, or we're going to have some sort of blanket deals out with every country that get announced relatively soon. But the market interpreted it as positive and traded higher. And we lifted off through SPY 590 on that news. And I thought that was going to be another interesting test of something that's been happening with the stock market every day recently. Is last week we were very, very pinned to SPY 590. Very, very pinned to SPY 590 and QQQ 520. Bizarrely pinned. To the point where another thing in my head was, for some reason they just were pinning this market to those levels for last week, for end of month, whatever. We see stuff like that happen all the time around bigger options expirations. So it could happen here at the end of the month. So coming into today, I was like, wow, it's a combination of us getting a not great economic number, which is actually some hard data there, in combination with that month ending where maybe we're not going to get the pin anymore. And of course, it looked like when we snapped back from 10 a.m. that we were immediately pinned back at the level. But then when Trump announced that all these countries can submit their bids, and we moved higher off of it, I couldn't help but wonder if we would roll back down off of that with the same pinning effect at 590, 520. And that didn't happen. So on bad news on Friday, the market went down for 20 minutes before making a V-bottom. On bad news today, the market was already selling into it, but then went down for 2.5 minutes before making a V-bottom. And then on news that seems like you could hardly even interpret it as good news, we rallied and never looked back in the afternoon session. This market is mind-blowingly strong at this point. Like, made plenty of sense to me up until now where this bid was coming from systematics, and then last week, we have the data. It was hedge fund chasing, basically. And what's really interesting to me, and I said it in the morning meeting, was just as this market is maybe entering like some degree of a distribution phase up here that could mean that you roll down out of this, hedge funds are chasing right as they are having like the worst performance, at least macro hedge funds, worst macro hedge fund start to the year on record, which it looks like the record goes back to 2004. So hedge funds are getting smoked, and I'm like, last week I'm asking myself, who's buying? This morning we see it was hedge funds that were buying. They had one of their biggest buy weeks like ever last week, and it was primarily in big cap tech and infotech. So I'm like, all right, we're through the dumb money, which is the hedge funds these days, holding the stock market up last week in the face of buying every mini dip in the face of bad news or whatever. Now again, coming into this week, who's left to buy, and what other good news is there to even come out at this point? Yet this price action is so incredibly strong. Every dip is bought. We closed really well today, and the market interpreted that Donald Trump headline very positively. And finally, as we look at the technicals here at the end of the day, I'll repeat what Pat was saying into the close. This market looks very ready to break out. This market looks so ready to break out. We've been in the consolidation here for 2 weeks. Friday we had bad news that got bought back up. That's actually a very healthy candle. Friday's candle here is super healthy. And again, I was thinking in my head maybe it was something to do with end of month or whatever, but now here we are in June and we still are really strong. So Friday's candle looks like a very tiny higher low within the confines of this consolidation, setting us up for the breakout. And then today, in the face of bad news, we downticked for 5 minutes, closed on highs. We're back at resistance. SPY resistance I've been talking about is SPY like 593 to 595. We closed at highs into it. I mentioned Wednesday last week when I was on with Sammy and JR. One of my favorite bull patterns is when you have a consolidation, which is what we've had now for a couple of weeks, and then within that consolidation, you get a tighter upper level consolidation. And that's what this is turning into. This 4 days of very tight sideways price action in the upper bounds of the overall range that we've been in for the last 2 or 3 weeks or whatever looks extraordinarily bullish, like we're set up for a big breakout. I don't know what can derail it. We have a lot of important economic numbers still coming out this week. We've got JOLTS, we got services, PMI, we've got the big one, the payrolls number is on Friday. That's going to be by far the most important one. But like I'm saying, this market's ignoring every possible piece of negative news, and the technicals look extraordinarily bullish. With that said, I did say this earlier as well. I've said it a couple times recently. I'll say it again. One of the things that I've always found fascinating about the stock market is I've seen this before. I've seen other environments where it's like, man, everything I'm looking at looks negative except the technicals, except this underlying bit to the market. And a lot of times the market will do just an incredible job pretty much ignoring every bad piece of information, and then suddenly, all of a sudden, it just doesn't. And funny, a lot of times that is coupled with a market dynamic event like an OPEX, unquenching some gamma or something like that to enable this market to move. But what you'll end up seeing when that happens is all of the stuff that we're talking about at the end of last week and all the stuff we're talking about today, all this bad news that the market's ignoring, sometimes all of a sudden, seemingly randomly, the market just sells down, and then the financial media is like scrambling for the reason of the sell down, and they just parrot out the exact same things that we had been talking about for 2 weeks into it. And I can't say that that's going to be the situation again here, though it is something that's in the back of my mind, because while I think that there is some real reasons to be bearish right now on the economy and have a negative read through on the stock market as a result. While I've had that in the back of my head for over a month, I managed to be primarily bullish end of April and at least the first half of May, because we had all the data, the market dynamic data of the positioning squeeze, and now that's gone. Yet we can't break lower. It's not gone, but it's different. It's not as supportive as it was. So I don't know. It's where we're at. Sometimes it's as simple as don't overread these headlines. Don't worry about the headlines. Just focus on the price action. Price is what pays. Recognize that this chart is looking extraordinarily bullish, and be prepared to make money on the breakout higher, assuming that it happens. With that said, I've had a lot of success, kind of like what Pat said, in recognizing like, hey, all this bad stuff is going on here, so therefore there's a higher probability of a false breakout occurring. But the thing is that we already kind of had our false breakout, not so much with the Qs, but we had them with the SPYs on Thursday last week. We gapped up really big on the courts pausing Trump's tariffs, and we gapped up, we sold down, and that looked like it could have been the false breakout, but zero follow through to the downside on that. So I don't know, guys. I really don't know. I am absolutely blown away by the degree of the strength in this market in the face of consistently negative news recently. But the price action is what pays you, and I can be wrong for, I could be right, but if the Qs go up to 600 before I'm right, that's the same as being wrong. Or another way that you could say it is the market can remain irrational for longer than you can remain solvent. And that statement even assumes that you're right. And we're all wrong in this business a lot. So, I have been under the thought process that this market is set for some weakness. If we could get some bad news and we get through the systematic squeeze, I could be wrong. I could be just dead wrong on that entirely, or I could be right, but too early, in which case it's the exact same thing as being wrong. So it's really all that I've got. Some of these names are so strong. I guess the only other thing I would mention from today's price action was just how we squeezed in the beginning of the day to once again fail. The Qs here, compare the QQQ 5-minute chart in the beginning of the day versus the IWM 5-minute chart in the beginning of the day. It made me actually especially bearish because it seemed like leadership was so few and far between off the open this morning that was causing this QQQ squeeze. It was basically semiconductors, NVIDIA super strong in the first 10 minutes, Palantir being really strong for the first, honestly, just 5 minutes, maybe you could argue 10 minutes. Some of these names were trying to go, but they were few and far between, and then seeing them fail was like a whole extra thing of like, wow, the leadership here is so scant, yet now those leader names from this morning are pulling back so heavy. I remember watching this NVIDIA create these two tails here at 945 and 950, exactly where they should. One of the stronger stocks in the market gets extended, pulls back to the 80 and the 5, creates his two tails, looking like they're ready to go. And I was like, guys, watch the low of these tails. If the low of that tails break, we might lose the whole market here because, again, in that opening squeeze, things just didn't seem right to me. There just wasn't enough leadership, and it seemed very fragile. And we lost that low in NVIDIA. We lost the opening low in Palantir, and I was also looking at 132 at a certain point. We lost 132. Eventually, we lost the moving averages. We lost the opening low. We lost the NVIDIA pivot lows. Market's looking bad. Everything's looking bad. Leadership is failing, and the weak names are getting pummeled. So IWM, did Russell close green today? Yeah, IWM closed up 0.4%. I think it was down over 1% on that down move. That's wild. Wild turnaround. But that's just where we're at. Buy every dip, even if that dip is like one red 5-minute bar. So that's all I got. Happy to take a look at edit anything you guys have. Yeah, Qs are still going after hours. From Dave S. Potentially a tinfoil hat theory. Could the CTA retail bid have front-run both the initial down move at the start of the year and the bounce back to the point where fund managers chased both ways and are now fully back in the market due to them deciding that taco trading is what works instead of looking at the macro backdrop? I know that sounds incoherent. No, I don't think that sounds incoherent, but then we should have gone down today. That's exactly what I think happened. And this is how markets work, right? This is how market feedback cycles work. Macro managers, when we knew the positioning squeeze was probably about to happen, remember calling for it when we were at SPY 508, 510 back here on April 21st. We know that for almost all of this rally, hedge fund managers were super, super underpositioned. And the systematic bid forces the stock market higher, but at a certain point that then, like, it was like the vol control funds, I'm trying to remember the order here. It was CTA's first or vol control funds, I actually don't remember, but I'll just make one up. It was like vol control funds had a bid come in that brought the market above systematic CTA levels that caused them to buy. That then eventually we had like an additional week of very strong vol control buying. That then eventually brings you high enough where shorts are starting to get stopped out. And then that brings you high enough where hedge fund chasing has to come in. So it's like one degree of buying after the next. I would almost bet you that, forget about any aspect of the actual narrative, if the SPYs were at 530, let's just say, then the hedge fund buying, the record hedge fund buying that we saw last week would not have happened. It's like it happened because the market got pushed higher from systematics that led to the hedge funds actually buying. That's how these feedback cycles work. But again, my whole thought process is we're kind of through all that now. Though last week I didn't know who was buying, now I know it was the hedge funds. It seems like we're kind of through all that now, but this market is just ignoring everything. And look, it still could be further repositioning from the funds. The first thing I thought of when I saw the Qs rallying in the first 5 minutes of the day, like when I saw this bar close, I was like, the hedge funds, they got more to buy. They're using every tiny dip to come in and add exposure back. And that must be exactly what we're seeing here again this morning. And maybe it is. Maybe that's what we saw right off the open. And then maybe that's what we saw at the 10 a.m. number as well. But it just seems crazy to me that they're still buying that much after last week being one of the biggest hedge fund buying sprees on record. So yeah, I don't really disagree with you there, Dave. I think that's actually in fact how markets work. From Liam, I put my stop at a level that I would be comfortable buying at after trimming the trade to worst case break even. Tough lesson to learn as we grinded higher, and that was the initial thesis, but at least a green lesson. I don't really understand what you're saying. You put your stop at a level that I'm comfortable buying. Well, first of all, I don't even know if you're short or long on the trade that you're referencing. But I can just give you a broad statement. Stop should be based on the stock that you're trading, on the chart. I really don't like a big thing that a lot of people do is they put their stop at their entry price after it begins to work. I hate that. It's random. Or the price that they're comfortable with. I hate that. That's random. You should be utilizing stops the market tells you are important. That's what you should be utilizing. From Tate, I asked 2 weeks ago, but are we still in the camp of if we do get a pull, it is buyable? Yeah, I think that pullbacks in the market, look, the technicals are extremely bullish, and pullbacks, therefore, in this market are buyable. I might be getting in my own way on not doing that as aggressively as I should be because of everything else I'm talking about that I see as a big problem that makes me not want to be chasing this market at these prices at this time. But technically we're buyable, I think, as long as we're above Friday a week ago's low. I think that is the key spot to this market right now is 575 spot 60, really through that 570 still. As long as we're above that, dips are viable. But, you know, I've kind of been of the opinion that from a timing perspective and market dynamic perspective and the other reasons outside of the technicals are just not as bullish right now where that could fail, and I'm just not being as aggressive with it. But yeah. From David, how do you find level zones to trade off of on a stock on the daily? If you could use AMD as an example to find new levels to go short or long on the daily. I know we need to know the levels, and being new, it's challenging. It's challenging times to find them. I want to make sure that I'm seeing them correctly. Sure. So the first thing I would say is that not every stock is always going to have an important level that's going to be notable that you should pay attention to. I can certainly look at AMD. I would rather utilize some of the ideas that I present in the morning meeting, which I hope you're participating in that morning meeting, to show you how I find levels, right? So I probably go through 100 stocks every morning. I probably go through 100 different stocks every morning. Every name that has news, plus my like usual basket of 50 or so stocks. And what I'm doing is I'm looking and reading the news, and in conjunction with that, I'm looking at the daily chart to try to find levels. So I don't know how this name worked because I wasn't going to trade it anyway, but I wrote it down for everybody. Oh yeah, it worked great. ROL. ROL was one of my ideas today that I brought up in the morning meeting to buy through or versus 57.50. Through 57.50 if it opens below it, versus 57.50 if it opens above it. And look. I mean, this is how simple it is. You just can see a clear resistance line at 57.50 in it. I mean, the line I'm making right here, it's very, very clean. Usually they're not this clean. Usually they're not this clean. Usually support and resistance are more like areas, and areas can be a little bit tricky because you know, if you're trying to trading versus an area is difficult. We want to trade versus prices, a price point, but the market's, you know, not always the same way the technical analysis textbook or me drawing on a whiteboard might look like. But this ROL 57.50 is very, very clean. You can see all the tails that went exactly into 57.50. This morning it had a news catalyst, so we love that. That's an extra layer of probability to bring in buying. And it basically gave a breakout via the gap. It gapped above the 57.50. So you just go long versus 57.50. Others might be a little bit less clean, and they don't all necessarily work. Moderna had some news this morning. Moderna's a little bit sloppier. You have this high here on May 27th of 27.85. You got this high here on May 29th at 27.15. I might have been looking at the sometimes I'm looking at those daily levels in conjunction with pre-market levels if it looks like there's a good amount of pre-market volume, which a lot of times if there's news there is. No, but that 57.50 is not super clean on this pre-market chart either. So what I end up doing in those cases where it's not as clean as an ROL is, you know, again, I'm trying to find what the daily level is, but it's not clean. So I more estimate the zone, right? So Moderna, I'm like, all right, 27.50. It's really the space between like 27.85 and 27.15. Let's call it 27.50. And then you now know the important daily chart spot, but that's just like a zone, and then you want to go to the small time frame for your execution and everything and confirmation. If I see that you're getting heavy opening volume through like that 27 area, 27.18, 27.15 to 27.85, whatever it was, area, or I see a good execution setup as that's occurring on that small time frame, and I know it's in my zone, it's around that 27.50, that's it. You know, that's what I can go with. Or, you know, Boeing versus yesterday's high. That was another one. So that's pretty much how I'm doing it, and I could do it for every stock. And honestly, a lot of names when I look at them, like I remember someone brought up CLF this morning because of the gap up on the news. I'm like, there's just no level nearby. Sure, there's news and that's notable, but I need everything to come together. I want that news combined with that level. I want that level combined with that news. I want we were talking about, and the market ended up getting super, super strong, so I was probably wrong on this. But at some point today, we were talking about the relative strength in AMD plus this like little bull flag pattern. And at that time, the indexes looked weak. I don't love that. I want everything to line up. I want to see this beautiful 5-minute bull flag in AMD with relative strength in AMD combined with the market that's also telling me higher, which at that time it wasn't. The market at that time was telling me lower, but we know that the market doesn't ever go down ever. It only goes up. So eventually, even though the market was saying lower for a little bit, then eventually the market just went up anyway because that's what happens these days. But yeah, I'll look through plenty of charts and not find levels. But AMD like 115 looks pretty clean, to be honest. So AMD 115, there's a little bit of a level there. Sometimes levels are more like kind of like inflection zones, I'll refer to them, or inflection points where you'll see that this has been very important as both support and resistance a lot of times in the past. It might be more difficult when that happens to make it actionable, but it means that the level is still kind of notable. So like XLE 83 has been important. It was big resistance in April. It was support for a certain point in May, and now it's become resistance again. It's an important inflection point. You can just see it, right? Clean, very clean resistance, clean trying to hold to support, clean resistance again. So that's pretty much it. I go through everything every morning. A lot of them I immediately throw out, even if it had news or whatever. If there's no level combined with that news, I'm usually out. Or otherwise, sometimes I'll still write down like Robinhood. Here's another one, right? Not perfectly clean, but like roughly this like 66 to 66.50 zone. Bull flag resistance here. No new news in Robinhood this morning that I was aware of, but that could set up the breakout that could give the next leg. And that was another one of the levels I wrote down in the morning meeting today. So yeah, and that's pretty much how we're doing it. Yep, good stuff, David. Yeah, I see where you're getting stopped out there, Liam, and I don't like that stop at all on the chart that you posted. That looks very random. That's what you were comfortable with. There's no real important. I mean, maybe you're using the low of the like 5-minute bar with the volume actually that's going higher that your red line is drawing to, in which case that's okay. I don't mind that as much. It's very tight, but I don't mind that as much. What else? Do you use any type of scanner to see what stocks are in the news? I use the virtual trading floor. Yeah, just the headlines. That's it. From Daniel S. How do you balance the long and short positions shared here? Do you monitor delta exposure? Or is there any course you suggest to take to manage the size of these positions? So I don't know about a specific course, but I mean, it's the stuff that I talk about here in the VTF all the time. I'm long and short at the same time, and I am noting what my net exposure is basically. Like if I've got $1 million worth of stock long and $2 million worth of stock short, I know I'm net short by $1 million, and therefore if the SPYs go up by 1% and my stocks go up by 1%, then this is how much money I'll probably be down. Obviously, it's not as simple as that because of relative strength and relative weakness. Also, my names tend to be higher beta. So in reality, if the SPYs go up by 1% and I'm short by $1 million worth of stock, it's going to be worse than me just losing 1% on $1 million. It'll probably be more than that. But yeah, I mean, that's basically it. And then I've got game plans in place that I spend a lot of time talking about in these afternoon meetings for how I build in and build out of positions, whether that's getting heavier in a position or whether that's building out for a profit or building out for a loss. It's all caked into the game plans themselves. So if this market makes new highs, which it looks like it wants to do, then I will be piecing out of some of my shorts further for a loss at those new technical highs. I'm not just going to stop out of everything all at once. but I will be sizing down for a further loss in that situation. So hope that helps as a short answer. Just keep following along with the team here, and I'm sure that you'll be learning more about how I do that as I dive into specifics of game plans on certain afternoon meetings. Cool. All right. Got through everything in the VTF, it looks like. So let me check out the YouTube and see what's going on over with our friends who like to tune in there. From Cyril, the buyer stepped in after 10 a.m. number flush. Then we just grinded higher. What is the probability of continuation in your opinion? Continuation higher? It looks high. That's what I spent the whole first part of the morning, this afternoon meeting talking about. Is I'm blown by the resilience of this market in the face of any piece of bad news that comes out gets immediately bought back up. And what I was thinking earlier today, and now it looks more like which way we're going to know. It looks more like we're going to know which way it's going to happen. We've been in this consolidation. The consolidation is technically bullish, right? This is a bullish consolidation that the market is going through. Therefore, based on technicals, we have a higher probability of breaking out than breaking down. Markets work in periods of expansion and consolidation over time. We went through a large expansion period with this uptrend. From the pivot low on April 21st at 510 to this high at 595 a month later. That was a big expansionary uptrend period. From that high, we spent 2 weeks or so going sideways. That is a period of consolidation. After a period of consolidation, you're going to tend to then get another period of expansion. If we get a period of expansion, or when we get a period of expansion, first thing I would note is that we could stay range bound for a good bit longer if we want to be. But when we get the period of expansion, it's going to expand either up again and give further trend continuation, or it's going to expand down and give us a pattern failure, and then this will look more like distribution. Which way do we break? The technicals say that there's a higher probability that we break up. And that's the main thing that I would go with. But some of this other stuff I feel like says that we should break lower, but we refuse to break lower. So I don't know. Let's see which way we break and try to trade in the direction in which the stock market is moving. That's usually the best way to trade, is trade for continuation, trade with trend, trade with momentum. That's usually the best way to trade. And if we break out, this could be a brutal break higher for continuation. Could be $40, $45 of upside, I think, is just eyeballing technical continuation, which should give us all-time highs plus some. Or we could have a technical break lower of this pattern, and the selling it could accelerate lower, because that's how markets work, right? Markets work in feedback cycles. The way that I was just describing earlier about how the systematic buying was like CTAs, and it was vol controlled, and it was more CTAs, and they were feeding off of each other, and then it became short squeezes, and then it became hedge funds buying in. That's how markets work. They work in feedback cycles. We could break higher after this consolidation and get another wave up. We are not at maximum positioning for systematics or for funds. There is more room for them to buy. Or you could break lower, and then this last bit of hedge fund chasing gets puked out, and then below the low from a week ago Friday, you get CTA selling that comes in, and it just becomes one thing after the next on the downside. That's how markets work when they go into an expansionary period. So we'll see what happens. Yep, we are climbing the wall of worry. We're climbing the wall of confusion. I read an analyst note this morning that was saying that this is not a wall of worry. It's a wall of confusion that we're climbing. Whatever. Snow Weekly looks juicy. Snow's been super strong. It's another one of these real leaders. The daily looks juicy also. From Cyril, could be that at some point market reverses and just goes down for weeks like it was in the beginning of the year. Absolutely, that could happen. I think that there's a decent chance that we see some real weakness at some point this summer. Maybe it's June, maybe it's July, though July tends to be a very strong month. Higher probability, maybe it's August or September. I still don't think it's impossible for the market to retest April lows, to be totally honest. I don't think it's impossible, but I think I'd be crazy if I was saying the market will test April lows based on how it looks right now. You know, you can't just make calls that just defy the technicals. You could say what I've been saying is, hey, there are some real reasons why this market could break down. Fundamental reasons. I don't know why someone's beeping at the front door. Fundamental reasons, other reasons, market dynamic reasons why this market could break down. But the technicals look so strong. And I'll tell you what, let's say, I'm not saying this is going to happen, let's say we test April lows again at some point this summer. You don't need to be short SPY 595 if we're going to SPY 495. You can wait for technical confirmation. You can wait for the break of the May 23rd low where you know that a feedback cycle of selling can begin because you're getting a failed move and you're getting the break lower and the CTA selling comes in and all that stuff. So you don't have to be short from highs necessarily to make money. Kevin saying shorting Qs at 520 made a lot of sense until it didn't. Yeah, pretty much today until it didn't. Am I the only clown shorting this thing? From Manny. No, you're not. I'm short too, but just respect the technicals, respect your risk management, and it's like I just said, you don't have to be short at absolute highs to make money if this market really rolls over. All right, I'm gonna jump. Have a great night, everybody. I'll see you all tomorrow.